How's it going, everybody? Hope you had a decent weekend. It's Stock Picks by Tim, and today we're going to look into a couple of stocks. Now, these for me are going to be long-term plays. However, the charts do look bearish, and I'm going to show you a couple of these. And if you like my videos, get something useful out of them, don't forget to like, subscribe, hit the notification bell. Don't forget to check out the links below for some free stocks and free crypto as well. And let's start off by looking at the SPY. Now, the SPY. We are very near a critical support level. If we break 360, we're very likely to fall further. Some even say the pre-pandemic high, which is right here around 340. Now I am zoomed in a bit here, and looking at the last 2 days in the market, we are trying to develop some higher lows. And I think if we aren't able to break this 370, we are going to push lower. So we could have a short-term rally. If we break this 370, we could push a little higher, have a short little run, but I do think the market's very heavy. Things are pulling back. The macro environment is definitely weighing in and just beating down some of these stocks. I do see some pain ahead still, and I really do think we will test that 360. It's just a matter of time. Next up, I wanted to glance at Cleanspark. It has been pulling back. I do see us potentially breaking $3. It did try to develop support there, but if $3 breaks, it's definitely likely we fall a lot further. I am eyeing 250 cash secured puts, 250 strike price, meaning if the price does go down to 250 or under, I'm obligated to buy Cleanspark at its current price, whether it's $2, whether it's $1.50. By getting the 250 strike price, I'm agreeing to pay $2.50 per share, regardless if the share's $1, regardless if the share's 50 cents. Now you also have to consider, if it doesn't hit, I will be collecting premium. If it does hit, I get a great deal on Cleanspark. And as we get closer to this 250, those premiums will keep rising. Definitely going to keep watching the cash secured puts. But you definitely can't argue that this chart is extremely bearish, has just been continuing to push new lower lows. However, we are approaching this potential downtrend reversal. Keep an eye on it somewhere towards the beginning of October. Do we find it as a rejection and fall further? Perhaps. Keep an eye on it. And next up, another very bearish chart pattern. We've got Facebook here. Has been selling off since September of last year and just cannot find a base, cannot find a new bottom. It tried to trade in this sideways channel here for quite a while. Once we broke it to the downside, it just started dramatically selling off even more. And as a long-term stock, I definitely like Facebook. And I do think that slowly DCAing over the next few months will definitely put you in a position of power for Facebook in the coming years. Now, one negative, huge blaring negative, is we are literally creating new lows as I speak. And you might want to wait for a trend reversal. As the old adage goes, don't catch a falling knife. But on the inverse, remember to buy the fear and sell the greed. So you have to weigh those two statements together and consider, when am I going to start buying these falling knives? Are they down enough for me to start nibbling at them? I have been adding to Facebook, and I'm definitely negative. I was actually adding in this channel here. I thought it was going to develop support and start breaking out at some point. I was proven wrong. However, I'm going to continue to hold my position, and I'm going to watch it to develop a new base. I currently haven't added recently yet. I'm just watching, seeing where this is going to go, but just how the market is lately, I can definitely see this coming down to the 120s before starting to level out. That being said, I definitely like Facebook, and I do think it's a great DCA. Next up, I did want to mention AMD, Advanced Micro Devices, and this one's selling off as well, continuing to create new lows as we speak, and it's definitely very bearish. However, for the long term, I love AMD, and I do think right now it's a great time to slowly add to it. Be patient, be methodical, take your time, but I think it's a great DCA. One big negative is we did break that $70 area, that 70 support I was talking about, and it's very likely we test this $60 area. We don't really have any supports in between there and where we're at, and I can definitely see this coming down towards 60 before trying to bounce, before at least trying to bounce. Of course, it depends on where the market goes. If the market just flips out of nowhere, this could see a little pop, but remember, we are in this falling channel here, and I could definitely see some lower levels for AMD. That being said, I think this is a great deal, and regardless of if AMD hits a bottom at 50, at 60, at 45, maybe, I don't really see it, but maybe, either way, I think long term you're gonna look back and it doesn't matter that you bought at 55, 60, 65, or even 70. Long term, I think this is a great stock, and it will be back in the hundreds in a matter of time. And next up is gonna be Indi Semiconductors, INDI. I definitely love this stock. We did break our uptrend here, and we did just flip the 50 to the 200 EMA. And when you see this cross, typically some more bearish action follows. And this is actually a great indicator to use for trades. You'll see the cross here, could have gone bullish there, ran it up. You see the cross down here, could have gone bearish and ran it down. Cross up, ran it up. Cross down, ran it down. Sometimes they don't play out. Look how there's a bunch right there. But when you get a nice definitive move, you can take action. I personally could definitely see Indi falling a little bit further. However, I love this company. We're seeing nothing but revenue growth. We're seeing more and more auto manufacturers adopting Indi semiconductors in their products. Of course, we know that Vehicles are going to need more and more semiconductors as the years progress. And Indi's in, like I said, they're in a growing space. They're not in a shrinking space. They are growing. They also have an absolutely stellar executive team. We've got some of the best in the business, and definitely love Indi for the long term. I could easily see some more pain. However, you do have to consider, these small caps haven't been doing as bad as the overall market lately. Small caps have had a huge drop throughout the year, and since their bottom, some of them have almost doubled up. So that's something to consider. These stocks currently are not at their bottoms while the overall market is. Facebook, AMD, the SPY coming down to new recent lows. Those are the things you have to consider. These small caps aren't at their recent lows. They aren't breaking their May 11 lows. While some are, Cleanspark, for instance, has been creating new lows recently. That's also due to Bitcoin. So there are definitely many, many factors to all these stocks, things you have to consider. But in terms of these stocks that aren't Bitcoin related, they haven't hit their lows for months. Something to think about. But that's it for you guys. What are you watching for today in the market? What are you going to be watching for the rest of this week? Are you getting into the small caps? Have you been watching large caps? What do you see as the deals right now? Let me know in the comments below. Thanks as always, guys, and take it easy.